Hi guys, it's Chris here. I just wanted to go through trading some news with you. Um, uh, I find that the CPI news events are really fantastic to trade. You can really make a lot of money by trading them. So yeah, basically the CPI news events, it stands for Consumer Price Index, and it changes the price, or it measures the change in the price of goods and services, and it's a key way to measure the purchasing trends and inflation rates for that particular currency and country. So if you want to find out, if you ever want to see when the news is happening, then you can go onto this site. It's called investing.com, and then you select the economic calendar, and it gives you all the news events, tells you what time the news is coming out. It shows you what currencies it's going to affect. It shows you how volatile the news is expected to be. If it's got 3 bulls, then it's highly volatile, and then 2 bulls would be moderate, and 1 bull would be low volatility. So we're looking for the news events that's got 3 bulls, specifically the CPI events. And you can see this news event was actually out yesterday. It affected the pound. It's high volatility. The CPI. It happened at 10:30 yesterday. So if I take you back to the charts and see exactly what happened at that particular moment. Okay, so here's where we're looking at. We're looking at this particular area here. Okay, so that news event actually came out at 10:30, which you can see the effects that news had on the markets. Huge bearish candle going down there. So the question is, how do you trade it? So the first thing that you can see here, probably I'm on a 5-minute chart. So I've gone down, zoomed in quite a lot. Often you'll find before these news events that you just get this consolidation. In other words, just a sideways movement. Nobody's really wanting to trade there. They know there's big news coming out any moment. So the markets generally, or they often go quite sideways before these big news events. So one thing that you can try is just identify, this is the 5-minute candle exactly on the half hour when that particular news came out. And if you just look at the previous few candles, what you can try doing is actually setting a stop loss. You can see they had a little low there, and then you just look at the last few candles, identify the first little high there, and then you can put your take profit like very far down. Okay, obviously you wouldn't know at this point how far the market is going to go. So you could have a pending trade going bearish, and then you can also have another pending trade in the opposite direction, stop loss underneath, and then with a take profit up very, very far. Okay, so generally speaking, like what happens with news events often is that it kind of tricks you. You get a bearish movement followed by a rapid bullish movement, and price kind of whipsaws up and down, and it can take your stop loss out pretty quickly. You can often lose money by doing that. The nice thing about the CPI events is that they tend to be quite reliable. In other words, once they go in the same direction rather than coming back and taking out your stop loss. So if you've got 2 pendings in place, obviously this is where the candlestick opened at this particular point. I hope you guys can see my cursor. So we would have a pending, like a bullish pending and a bearish pending. And obviously on this occasion, what happened is it went below this level of support here, and we would have had a pending in place at that point, and it would have triggered obviously my bearish pending that I've got in place. So then I would obviously cancel my bullish pending that I have in the opposite direction, because up until this point we don't know if the market's going to go up or down, so hence having the pending trades in opposite directions. once the trade takes and once it's going in that direction, obviously I'm going to cancel my other pending. So the question is, how far is it going to go? You know, often that's a tricky question to answer. Nobody really knows. But a couple of things that you can do. So for this example, the trade that we took, we have our stop loss just above this little high here. And then we had our entry point just below. So yeah, obviously you can look back at previous support and resistance by zooming out and doing all the things that we taught you to do in the course. Maybe you just wanted to trade up until there. Maybe you're happy with a one-to-one. It's not a problem. Ideally, we go for a little bit more risk to reward. So you could have had a look at the next level down, which really would have been this level. And you'd have got a nice 2-to-1 out of that, which would be fantastic. Another method, because as I say, these news events, they do sometimes really take off. So another method that you can do is you can actually use a trailing stop. And yeah, if you want me to, I've got a video on how to actually execute trailing stops. And really what it means is, instead of having a stop loss that's fixed, as your price moves down, so does the stop loss. So for example, what would happen on this occasion, if I had a trailing stop, if you see this rectangle here, so as the price moves down, say for example the price moves down like that, and then as it moves down, the stop loss follows it. As it moves down a bit more, stop loss follows it. As it moves out down a bit more, stop loss follows. Moves down more, stop loss follows. Would have gone down more, and then the stop loss obviously is following behind, it's trailing behind. Eventually what happens is it gets to a point where the stop loss is following at that distance. Don't worry about the take profit. Price comes down, the stop loss follows, and eventually the price doesn't go down anymore, but it retraces up. So you would have got out at that point there where the red line is, just from using a trailing stop. So if you have a look at what we could have accomplished getting out at that point, as going back here, you would have had your stop loss there, the entry point would have been underneath here, and then your take profit would have been around about there. So you could have achieved a 3.6% just in that one trade, and you'd have been in the trade for 15 times 5 for about an hour. Is that right? Yeah, over an hour. So not bad, 3.5% in just over an hour's trading. So yeah, I hope you found that interesting and helpful. But look out for these CPI events. They often go like this. Obviously not always. Sometimes the news is just neutral, so it doesn't really take off. But when it does take off, then sometimes you can get some really good trades out of it. If there's any questions, then come onto the chat room, or give us a call, or drop us an email, send me a message, or just pop into the office, and then I'll obviously answer any questions that you have, as always. Thanks a lot, guys.